In 1929, the world witnessed one of the most shocking economic collapses in modern history. It began with the sudden crash of the stock market, an event known as the Wall Street crash of 1929. Within a short period of time, billions of dollars in wealth disappeared. Businesses collapsed, companies shut down, and millions of people lost their jobs. What followed was a global economic disaster that later became known as the Great Depression. Before the crash, people believed the economy would continue growing forever. Many families invested their savings into the stock market because everyone around them seemed to be making money. But when the market suddenly collapsed, panic spread everywhere. Investors rushed to sell their stocks, but there were not enough buyers. Prices fell rapidly, and people watched their life savings disappear almost overnight. However, the stock market crash was only the beginning. The real fear started when banks began to fail. During that time, banks did not have the same protections or regulations that exist today. If a bank collapsed, customers usually lost all the money stored in their accounts. There was no deposit insurance and no guarantee that people would ever get their money back. As rumors spread that banks were running out of money, people began to panic. Long lines started forming outside banks early in the morning. Families waited for hours, hoping to withdraw their savings before the bank closed its doors forever. This situation is known as a bank run. A bank run happens when many customers try to withdraw their money at the same time because they fear the bank might fail. The problem was that banks do not keep all customer money in cash. Most of the money is invested or loaned to businesses and individuals. So when thousands of people arrived at the same time demanding their savings, banks simply did not have enough cash available. This caused even more panic, and many banks were forced to shut down. Between 1930 and 1933, thousands of banks in the United States and Europe collapsed. Entire communities lost their savings. Families that had spent years building financial security suddenly found themselves with nothing. Some people lost their homes, while others struggled just to buy food. Because trust in banks had been destroyed, people began searching for new ways to protect their money. One of the most common methods was simply keeping cash at home. Many families hid their money under mattresses, inside drawers, or in secret boxes. This behavior became so common that the phrase money under the mattress became widely used to describe people who no longer trusted banks. Some people became very creative with their hiding places. They built secret compartments inside walls or floors where they stored cash and important documents. Others hid their money inside furniture or behind loose bricks in their homes. In some cases, people buried metal containers filled with cash in their gardens or farmland. Years later, during home renovations or construction work, workers sometimes discovered hidden boxes filled with old currency from the Great Depression era. These discoveries showed how deeply the crisis had affected people's trust in financial institutions. However, keeping large amounts of cash at home was not a perfect solution. There were risks such as theft, fire, or natural disasters. If a house burned down or was robbed, all the savings stored there could disappear instantly. Because of these risks, many people began looking for other ways to protect their wealth. One of the most popular alternatives was gold. For centuries, gold has been considered one of the most reliable stores of value. Unlike paper currency, gold cannot be printed by governments, and it tends to hold its value during times of economic uncertainty. After the crisis of 1929, many people began converting their savings into gold coins, gold bars, and jewelry. Gold had several advantages. It was easy to store, highly valuable, and widely accepted. Even during times of financial instability, gold could often be exchanged for goods or services. This made it extremely attractive to people who no longer trusted banks or paper money. Silver was also popular during that time. Many families stored silver coins because they could be used for smaller transactions. If the banking system completely failed, people believed precious metals like gold and silver could function as real money. Another lesson people learned during the Great Depression was the importance of diversification. Many families realized that keeping all their savings in one place was extremely risky. If that single bank failed, everything could be lost. To reduce risk, people began spreading their wealth across different forms. Some kept a portion of their savings in cash at home. Others stored precious metals like gold or silver. Wealthier families sometimes invested in land or farmland. Owning land provided a sense of security because even if the economy collapsed, land could still produce food and resources. Farm ownership became especially valuable during the Great Depression. Families who owned farmland could grow crops and survive difficult economic conditions more easily than those living in cities. In many cases, food production became more valuable than cash itself. The crisis of 1929 also forced governments to rethink how the banking system should operate. Leaders realized that if banks continued failing, the entire economy could collapse permanently. As a result, new financial regulations and protections were introduced. In the United States, reforms eventually created systems that ensured bank deposits and strengthened banking oversight. These changes helped restore public trust and prevent similar disasters in the future. Today, the global banking system is much more advanced and regulated than it was in 1929. Banks are monitored by governments, and many countries provide deposit insurance to protect customer funds. Digital banking, electronic payments, and financial regulations have made the system more stable. However, history shows that economic crises can still happen. The world has experienced several financial shocks even in modern times. Market crashes, inflation, political instability, and global conflicts can all affect financial systems. Because of this, many financial experts still recommend keeping a small emergency reserve of cash outside the banking system. This is not because banks are unsafe, but because unexpected situations can occur. Power outages, banking system failures, or temporary financial disruptions could make digital payments unavailable. For this reason, some people keep emergency cash in secure locations at home. Modern safes are often fireproof and waterproof, protecting money and important documents from damage. Others store part of their wealth in physical assets such as gold, real estate, or other valuable items. The key lesson from 1929 is not simply about hiding money. It is about understanding risk and preparing for uncertainty. Economic systems are powerful, but not perfect. Even strong financial institutions can face crises under extreme conditions. People who survived the Great Depression often shared a common mindset. They believed in preparation, diversification, and financial caution. Instead of relying on a single system, they spread their resources across different forms of security. Nearly a century later, the lessons of 1929 remain relevant. Financial markets continue to rise and fall, economies grow and shrink, and uncertainty always exists. Those who study history can better prepare for the future. The collapse of banks during the Great Depression showed the world how quickly financial stability can disappear. But it also taught generations an important lesson about protecting wealth, planning for emergencies, and maintaining control over personal financial security. Even today, historians, economists, and financial experts continue studying the events of 1929. The story is not just about a stock market crash. It is about how ordinary people responded when the systems they trusted suddenly failed, and how they learned to protect themselves in a world full of uncertainty.